We'll start, though, with this morning's tech movers, big movers. Kristina, Partsinevelos looking at Broadcom and CNBC on CrowdStrike, both of those stocks falling after their respective earnings reports. Let's get to Kristina first.
Well, Broadcom shares are down quite a bit now, about 15%. Strong numbers on the surface, but just not strong enough for this crowd. Q3 AI chip revenue guided to about $16 billion. That's up more than 200% year over year. But the street was looking for a higher number, specifically buy side. And with the stock really running up 13% just over the last 5 sessions, heading into the print last night, even a near miss hurts. The bigger blow also came from CEO Hock Tan reiterating on the call, not raising the fiscal 2027 AI revenue target of $100 billion. So he used the word reiterate. Buy-side expectations were already closer to $150 billion, so a reiteration just wasn't what they came for. Then there's the competition question. Google is now working with MediaTek on inference chips, an acknowledgement that Broadcom is no longer the only design partner for its largest customer. Wells Fargo is hearing from investors this morning who said it sounded like, quote, an admission of defeat. Morgan Stanley is a little bit more measured, saying Broadcom can hold at least 80% of its served market long term, but the commentary really opened the door to a narrative that the stock didn't need right now. Gross margins also guided down to 74% on product mix, guided down. 74% is still high, and the Anthropic deal shifting from racks to chips only still weighed on the AI revenue number, even though a lot of analysts already expected that move. Broadcom's loss may be someone else's gains. Wells Fargo has flagged positive read-throughs to Marvell as well as Intel, even though everybody's red this morning. Intel down at 2.5%, as investors really assess where custom chip share count could shift to. On the analyst side, Bernstein says shares may pause for the next couple of quarters. Mizuho says buy this pullback with a $530 target. Bank of America is keeping its buy rating, pointing to nearly 100% AI revenue growth in fiscal 2027. So according to the vast majority of analysts who have put out these notes, at least 10 on the street, the bull case hasn't changed for Broadcom. It's just the timeline got a little less certain, guys.